Good morning and welcome to the Euro Trade. I'm your host Mark Stoker D, and we're going to be looking at levels on metals and maybe even have a look at crude oil that turned around. But before we begin, make sure to familiarize yourself with the risk disclaimer that Bruno posted in the chat before. Okay, so starting out with copper. Copper actually looks pretty interesting if I focus on very large time frames. We're still going through this big area of sell-off that we had end of July. And in the long run, I do expect that to be tested. So whenever the opportunities come, I would like to be long copper. Having said that, even though the volatility has been increasing in copper, it's still comparatively slower than silver, which could be a good thing or a bad thing for some people. Let's get rid of these. But some of the levels that I'm looking at today, just based on how the options are positioned. First and foremost, somewhere below Asia low. So if we can get to 545 would be a pretty decent area. And one of the big reasons is because the average daily range low is sitting there, which is at 544.50. So just underneath. So wick below Asia high, then we watch the price. So we don't just randomly go in, we want to watch the price, see how it behaves, and if it starts to reverse and you see some buyer participation, then that will be thesis 1. Looking at how the open interest is distributed, we have a lot of calls at 550 though. So that is just here. We're above that, and if we start to go underneath it, there's not that much to stop it from reaching 545. But yeah, so we'll see. Time of day obviously a very important factor here. If we get to 545 and it's somewhere around the euro close, I wouldn't be opposed to trying the longs there, because typically we turn around at that time of day. And that goes for most products, but context obviously matters. If it's reversing to the downside, let's say we go up, so flip it to the bullish side, and we never manage to tag 45 or 48, I would be expecting to maybe get a bit of a wobble into the euro close and then more longs. So in that case, that becomes more of a scalp opportunity, or even staying out and then just waiting for the pullback and using that to run more longs. Silver is currently testing VWAP and trying to go higher. So let's have a look at some silver levels. So the upside looks pretty strong at 70. We have a lot of open interest there. Some of the more minor areas of support are 68, that is where GEX2 is located. And really we have 67 on the way down as well, but 65 is the one where we have the highest open interest sitting there. So we have the expansion of the implied volatility on both of these products, and whenever that happens there is some downside risk, because it means the market is expecting momentum, but we are not entirely clear which side. So if they for some reason start to sell this, whether it's the end of the year profit taking or whatever other reason, you might see some pretty fierce sell-offs happening. And yet on those days, if the implied volatility doesn't increase, that means there's no fear. It means that the pullback is pretty healthy and expected. So more of a take profit move than new position shorts stepping in. There's also another little caveat. If we look at how gold and silver have traded, quite clearly silver is lagging behind gold. Now, let me just clean this up a little. So let's go on the weekly chart. Now they've both gone into all-time highs, but comparatively to gold, silver has actually not been super crazy. It only started to pick up speed. It only started to really pick up speed in the last 4 to 5 weeks, I suppose. Whereas before it was a little bit more muted, but that was not the case for gold all this year. So looking at the correlations between the two, silver should really be up at like 70 or 75. So it's got a little bit of catching up to do, and I know it seems super crazy to go, oh my god, silver at 70, 75, but it's just, you know, it's the technicals, so you can't really get away from the correlations. If that breaks down, and if for some reason silver starts to slow down, that would signal decoupling between these two, Gwyneth Paltrow style, the conscious decoupling. But it's not, how would I explain this? It's not necessarily a bad thing, because we could have differences in manufacturing, like silver, for example, is used in a lot of automobiles. And also we have some applications in the computer industry. So, you know, it could be that silver actually goes even more bullish. But for now, just the way it looks, it does have some catching up to do. Now, as I'm talking, gold has gone into another all-time high. Is it going to hold? We'll see. But if it holds the all-time high on any meaningful time frame, being 30 minutes and above, I wouldn't really want to be trading against that personally, unless we get some sort of a liquidity vacuum, which is not really a play that gold does, right? So every time it went into a new all-time high, it held it, right? So here we have another reaccumulation, holds it, then keeps going higher and higher and higher. Then again, reaccumulation. So we're going to see more upside. I don't know. The time of the year is not that great for bullish moves, but you know, when has that stopped gold and silver? So, you know, I'm a little bit hesitant to put any sort of long-term positions without a major pullback. So for now, it's all going to be just intraday for me. This was from Asia Trading. So I had the classic, you know, breakout into the Shanghai exchange that held, and that was a quick trade. Then I did a similar thing on silver, on copper, and then that was the end. I went to sleep. So we'll see. You know, we'll see what the day brings. Just be aware of the implied volatility being a little higher today, and if they start to sell it on both of these products, there's not much to stop it, because the supports, when you look at open interest and gamma exposure, they're very light to the downside. That's not to say that in a strong uptrend you may get some new participants stepping in, but for now it is looking pretty bullish. So I do not want to fight that until we're at the time of the day when sell-offs are highly probable. Now, one of those times of day, of course, is the Tokyo close. You can see that in here. So we got to 5 o'clock my time, and then they sold it off, settled around VWAP, and now they're trying to make another decision. Copper is looking a little bit weaker than gold, because it's already slipping below the VWAP, so we'll see whether that actually brings us some more downside as we get closer to the London Metal Exchange Open that trades base metals quite a bit. But yeah, for now, we're just gonna sit and wait. Let's ask me about NQ to get kick off the week. Kick off the week. To get kick off the week. That's not English, mate. I don't know what you're trying to say here. To get a kick out of something, or to kick off the week. They're like two very, very different things. So I don't know what you're trying to say there, because you've mixed things. But, you know, I'm not opposed to people asking me about NQ. It's just that I personally don't trade it. But, you know, it takes a lot more to rattle my cage. Because I'm a trader, 19 years. And if you're easily irked by things, then, I don't know. That's some ego problems. All right. So yeah, obviously, just like you, I will be waiting what MP has to say. I was also impacted, so we're all in this together, unfortunately. So it is what it is, right? We carry on. All right, let's maybe get on to crude oil, and then obviously RBOB and gasoline futures. So Ken is really woken up on Monday, very determined to rattle my cage, apparently. Rattle, rattle. I will just remind everyone, I grew up with a comedian dad who was trying to rattle our cages all day, every day. So there's that. Right, let me pull some crude oil options. I did have a nice long option. I don't like to hold long options too long because obviously there's a time decay. So I only held it for like 2 days. Took a nice profit out of that. So that'll be my like Christmas cash. But let's maybe increase this to. Ooh, that's too many. Okay, let's go near the money. Okay. So I'm going to put my AI bot to use. So I have a whole bunch of little scripts. Let's see what it says. So I have a whole bunch of prompts and scripts that I've done for silver exposure. I do use Cursor AI because you can put multiple files in. And I use Opus Claude because it has like higher reasoning. Alright, so let's see what we can come up with. Right, so we've gone over 56, and that's actually a pretty major put area. That's interesting. I mean, I'm not super surprised that there are people on the short side on crude oil. But yeah, so we have a pretty decent probability of reaching 57.50. But really the major resistance is sitting at 58. So a very nice round number. Obviously, if it kicks off into another uptrend, we have 60, which is a massive resistance. And that would probably be not such a bad idea to maybe run some shorts from there. But below this price today, we have 56 round number. That is a major area. But I also see from the end of day options, which can be a relevant piece of data, 56.50 is GEX 2. So we might stop there. And because we are quite far away from, because obviously this is a monthly options expiry, so we're quite far away from the next expiry. You can have quite a lot of gamma sensitivity that happens, so it could go either way. You know how crude oil likes to jump off a cliff, like just randomly without any news, and people go, is that news? And I'm like, no, just crude oil. That is something to expect. And let's see what the implied volatility is doing. I mean, current implied volatility is like 29%. It's like, that's low. That's low for crude oil. A little bit higher than normal, but still low. So again, I wouldn't expect crude oil to be running super quickly anywhere, to be honest. And it looks pretty range bound right now. So let's move on to the crude oil chart. Whoops. Okay. So for now, Asia mildly bullish. And you see this red box? This is actually a demand area that I put, I don't know when you were all here, like a long time ago. And we are trying to bounce from it. But actually on the weekly time frame, this doesn't look like a bounce to me at all. Like this is a bounce, right? So when you have a week where it really pushes, and I don't know whether we're going to get that with Christmas looming. Crude oil is not really the product to trade in the run up to Christmas, and this is the Christmas week, so you know most crude oil commercial hedgers and people who trade it with quite a lot of size, they're probably not even there. So you know, it's not like you see these massive Christmas rallies on crude oil. It's just not a thing in energies. But as always, I will be using crude oil levels. However, I won't be trading directly crude oil. Instead, I will be expressing my opinion and views in RBOB or heating oil. Now, heating oil is bloody thin. It's probably one of the thinnest products you will ever come across. But as a result, even though there is inherent risk that it's just going to jump over prices, and at this time of day it's even more atrocious, because look, it's like run, nothing, 2 contracts, run, 3 contracts. It's like so thin. It does populate a little bit more during NYMEX, but it remains very gappy on the dome. So it is a product that is involved in the crack spreads, CRK spreads, and that means a very particular spread between crude oil, RBOB, and heating oil. And you know, that's something to look into, but you can't really trade that intraday. That's like a long-term play. But traditionally, there are certain ratios that you would use, because crude oil is the basic product, and then the other 2 are derivatives of it. So they're super correlated, but there are differences in which one is going to be the strongest one or the weakest one. So for example, if I see that crude oil is kind of jumped off a cliff, but RBOB and heating oil I sort of not, they're still sitting closer to the initial balance low, I will actually use the crude oil jump off a cliff to run a short in the other 2, or in one of the other 2, and then expect that the correlation is going to catch up somewhat. And that has been working pretty well, long and short. It just depends on the day. And similarly, if you're expecting, you know, that crude oil smashes, let's say, into a 57, which is high open interest area, but the other 2 have not done a massive jump off a cliff, and they're, again, sitting close to initial balance, there's a pretty big chance of a failed auction in either RBOB or heating oil when they're that close to the initial balance. So I basically use that correlation to run my hypothesis in the others. I can also have extended targets on, let's say, RBOB. Let's say that RBOB is reaching its own VWAP to the upside, and crude oil isn't, but it's also starting to turn around. So what I will do, I will pop a position long in RBOB and then not use its VWAP, but instead wait until crude oil reaches its VWAP, giving me an extended target. That's like a co-integration, correlation type strategy. It's a little bit more complex. That was actually my specialty back in the day when it came to mechanical trading algorithms. I used to love spread trades and kind of correlation trades, but also co-integration baskets of various correlated products. And it was great while it lasted. It was really good when the carry trade was still on. This was a very long time ago. And there are some signs that the carry trade has sort of popped up on the map, but not really with any kind of holding pattern. So it kind of pops up and it's like, oh, here's a carry trade on, and then it fizzles out. So it's still not a strategy that I would like to go back to. But it's just, something that was a part of my expertise in the past, and something that I occasionally use between the correlated products. You can say something similar about the metals, even though metals, they correlate, but they are their own commodities. They're not derivatives of each other. So, sometimes you can have days when platinum is just screaming to the upside, and gold and silver are just like chilling, having margaritas and not really caring. So, there's that. Whereas in crude oil, RBOB, and heating oil, that doesn't really happen as much. So, just something to consider. Any advice on GC? GC has come down in volatility a lot. I can run my little algos for gold as well, but I have seen a reduction in volatility in gold that was quite drastic, actually, because just like a few short weeks ago, we had gold average daily range that was on par with like NQ. It was like 1,200, 1,500 ticks per day, like absolutely crazy, like 150 points, dollars was the average move. Completely crazy. But now that's actually come down to about 550. Yeah. Ken says, not in a humorous mood this morning. Yeah, it's just, you have to understand, we've had some obviously the issues with the platform, and it's a very difficult time for everybody. And, anytime I'm on Twitter, I've seen some comments about, oh, the coaches are hiding. It's like, we're not hiding. I'm not a part of the tech team. I'm a part of the tech team in my own company, but I don't know what's going on. It's just like you, so obviously we've been hit with an inordinate amount of mob-like activity, right? So that everybody wants to lynch us. And the coaches have gotten, a piece of that as well. So, at the end of the day, I'm a trader here too, So it's been difficult. So me, smiling and going, yeah, let's just be all happy-go-lucky. I also want to see how we resolve this, right? It's not an easy thing. So not really that cheerful this weekend, I will be honest. And then to top it all off, one of my dogs had the big snip, and he's been really pathetic. And now he's been causing beef with one of our other dogs, who's actually his best mate usually. But for some reason, since he got snipped, he's been like really growly. So I'm really worried how that's gonna affect their relationship and whether they're gonna have a fight, which would be absolutely horrendous. So yeah, not in the most cheerful mood today, but again, we have to try and be emotionally resilient. It does get difficult, it does get difficult being, somewhat in the public eye and everybody expecting, us to have answers. We don't, we're waiting for the tech team, we're waiting for MP, we're just like, so yeah, so apologies if I'm less cheerful than normal. But, we'll get through it. Again, I've been with Topstep in some shape or form for 10 years. I have full trust in them. I know that the innovation is difficult sometimes. Mistakes do happen. There's obviously been a bit of a mismanagement somewhere. And we'll find out where. Like, I have my own theories, but I don't really want to speculate too much. All right, let's drag out gold so I can run it through and see what my new mate AI is saying. Obviously, I have scripts that you know are created. It's not just like dragging out random data and going, yeah, where's it going? Okay, so yeah, so Beth says, sorry to hear about your pups, hope it fixes itself. Yeah, I think we're gonna have to be careful. This top step thing, I like your attitude, trying to do the same. Yeah, I mean, look, in the grand scheme of things, platform malfunctions do happen, okay? When it happened to me, not on Topstep, but actually on CQG, out of all the firms and companies and platforms, I got hit by like 250 grand's worth of a loss. So, you know, it was the same thing. It was FOMC, you know, not the start of the day, but it was FOMC. And first of all, I was in a position that went massively my way. So I was like, yeah, this is like, oh yeah, Lambo coming in. I was much younger then. Obviously, this was 2015. And then I couldn't get out. And then the platform bloody locked up on me. And then the next time I opened it up, it filled my stop loss where it made absolutely no sense. That was where the liquidity was. But the platform also locked up on me. So I was like, oh, great. So that was a big loss, you know. And I always say, if I didn't have a heart attack then, I never will. We have, I suppose, the luck that most of you will be on the XFAs in SIM, where, you know, if MP decides, he can easily roll that back as maybe, I don't know, maybe a Christmas present. I don't know. We'll see. We will see. I'm not saying anything. Didn't hear it from me. I don't know what he's going to do. Honestly, I think they do need to fix whatever is happening. Just purely from a tech standpoint, there are obviously some vulnerabilities there. Whether it's server overload, whether it's something else, I don't know. We will find out. But yeah, platform issues do happen. And then when I tried to get in touch with CQG, there's this little clause in the tiny little small print that says they are not responsible for platform outages and they will not be compensating anyone. And you literally, legally, you can't do anything. So, you know, things happen. In the grand scheme of things, this is actually tiny, you know, losing a couple of XFAs, it's like, whatever, we can always get more. Is it annoying? Extremely. Does it affect people's mentality? Yes. But it is out of our hands at this point, right? So the only thing you can do is, you know, try and be, you know, try and do something else, maybe step away. You know, for me, prop these days is always just this like bonus money. If there's some, great. If there isn't, fine. So I'm not that concerned purely because I know that Topstep is not operating in any sort of malicious intent or anything. I can 100% assure you that's not it. But yeah, some things need to change, obviously. So we'll see how they're going to do it. And, you know, we are just coaches. We are TV personalities. We don't sit in on meetings. You know, we sit on coach meetings, but it's all just coaches. There's nobody else there. You know, there's, you know, 11 coaches and a couple of other people who are running the coaches side of things. And then we've got the TV team, but we are also usually not privy to the production team stuff. So even that is not something that we can provide guidance on. But yeah, the tech side of things, it's a completely different department, completely different people. So I would like to tell you what's going on, but I don't know. I really don't. So All right, gold. We're finished. So today's move, it's sizable, man. So let me just drag out ADRs and stuff. You know, today I will be on group coaching, which I'm suspecting is going to be a difficult one with the mob. But I don't know, maybe MP will speak before then, and depending on what he says, maybe we'll be safe. Marked safe from the chat mob. Or not. We'll see. Alright, so we've already busted through the ADR high, which was located around 44.40. So I'm just going to drag this in favor of speed. So 44.40, if we start to go below it and reclaim this without any buying wicks, then that would mean we're coming back into the former Asia range. Maybe a test of VWAP, but the options are, again, very, very bullish, I believe. So let me just read through this better. Having said that, implied volatility has reduced markedly, like I said, but the price rallied. So this means it's an orderly continuation of the move. So there is almost no put protection above 43.50, and we're well above it, so not surprised. And now that we've gone over 4400s, that was a strong resistance, and we managed to just slice through it. Now, obviously, the whole chain is pretty bullish. I would say out of all of these metals, bizarrely, gold actually has the cleanest chain ever. The major target is still sitting at 4,500, so 61,000 open interest contracts. That's a lot. Well, that is a lot. So yeah, when it comes to put call premiums, gold is most bullish. Nearly everybody's long. Like everybody, their dog and their grandma is long gold. Are we surprised? Probably not. And then let's play the devil's advocate to the downside. Well, yeah, 4,400 being reclaimed would signal a potential for more serious downside. And honestly, because nobody's protecting this is just like weekly outlook. Not necessarily for today, but if we bleed through 4,400, unless something changes in the options chain and there's some like put protection that gets put in, there's really nothing to stop this from rolling over. So, you know, any good news, which I don't think we're going to get, like I don't know, everything looks geopolitically a little bit risky still and uncertain. And what do we do at uncertain times? We buy gold. So, yeah. Yeah, to the downside, yeah, 4,400 is one. The next one, 43.25. And then 4,100 is where, like, some more serious puts are located, but nothing within the day's range. So the puts are all the way down. I mean, you can't even see them, right? They're all the way down here, which is very far away. I'm just interested what that looks like, 4,100, what that looks like. That's all the way down here. Wow. So that's straight into the reaccumulation demand. That's an interesting position. So let's see how big of a drop would that comprise. From the new all-time high, that would be an 8% drop. Interesting. I mean, if we get down there, wouldn't mind some options there. Just maybe just to collect some premiums there. I don't know. We'll see. We're so far away from it, though. It's maybe a something to talk about in the new year as a potential for further positioning. But yeah, purple line is always VWAP on my charts. So it's Globex VWAP. So here's one. There's this one. You can clearly see that gold is more bullish than silver. But at the same time, I've been favoring silver because you can position yourself with a reasonable stop loss. Like you can pop in a 55 tick stop. And if you're a bit careful with where you're getting involved, because I generally try to get involved around the highs and the lows, that tends to be enough to run a decent trade. But otherwise, if you look at the ATR, I mean, you get this kind of a drop, that's like 180 ticks in your face. Boom. So you wouldn't survive that. If you are expecting, like for example, some more novice traders to see this happening and they don't know about the Tom and Jerry chase between the sessions, and they're expecting that this is just going to keep going without any pullbacks. They get involved here and they're like, yeah, it's a London breakout. It's like, yes, but time of day. There's a take profit move. Now, some take profit moves in very bullish markets, if they're short, they don't have a lot of legs, so they will be more scalps. And then I do use VWAP as a target for those kinds of moves. So instead of running the whole Asia range, which would be something to do maybe for the time when Asia is bearish. So Asia bearish, and then you break the low and then reverse. Then I will look to capture the entirety of the Asia range that was bearish. But why? Because we're in an uptrend. And as long as the larger time frames are making higher highs and looking pretty bullish and they're not accumulating, I would be looking to extend the targets to the long side, effectively be more aggressive to the long side than I am to the downside. But on most times, if I'm not catching this at really good areas, I would just look for a double. I'm not, I don't, like, I'm not one of those traders that tries to catch 5R every single day, because that's not happening. I would be trading with 20% accuracy then. That's not a very nice way to live, because you will be very nervous. You would be, sitting there every day getting hit, and then waking up the next day, getting hit again. Like, it's not good for your confidence. So for me, intraday trading is all about finding the golden middle, finding just the right amount of accuracy that will allow you to capture slightly bigger moves every so often, but also ones that will consistently give you doubles. So if there's an opportunity for a 2R, I will take it. I will not move my target further. That would be all I'm asking for. But in extraordinary circumstances, when we are coming away from a demand area after a good pullback and everything else is screaming to the upside, whether it's gamma exposure, whether it's the break of the initial balance and hold above it, whether it's a bounce from VWAP whilst the initial balance longs are happening, a sustained auction possibility, or even a test of the value high from the top. So you basically pull back to it, get to value high, it reverses and just carries on. But I still have space to the ADR. Like, let's say the value is somewhere here around the Asia low. That would be a bigger trade for me. So then I definitely do increase targets. So it's a very case by case, but there is method to the madness. There's like systematic rules that I use to figure out whether or not I do have space and volume, obviously, for any further bigger moves. But in absence of that, whenever we kind of go into a trend, and obviously I already took a big piece out of it, but if I want to get involved further, a couple of things that I'm going to do, I will probably go to another account, or I will massively size down, which automatically means that I can't trade silver, right? So even the micro silver is too much, and I want to preserve as much of this P&L as possible. So maybe micro copper might be something that I'll be looking at later. Not for group coaching, because group coaching time of day is more for energies market. So I might then switch to an XFA that's designated for the energies, and then maybe try and grab a bit more cash there. And this is where I have a slight issue with just like one live account, where in the live I can't necessarily run all of the strategies the way I want to, because it would be too much position change. I would go from trading Asia and or the overlap and LME session with like full size, depends on when I start the active trading for the day. But then by the time that the end of the day comes, if I want to preserve the profits in that one account, I then have to massively size down. And then that's like, is that even worth it? So whenever I'm in live, I don't trade that much, and I tend to trade like one trade per day and then just leave it. But yeah, it's a very, very different mindset, because I have different accounts in different currencies. I have the options account, so it's I wouldn't like smash all of my products into the same account, and therefore that's where I slightly struggle whenever they put me back into live, because then I just don't trade. I'm like, okay, well, I've done one. It's the end. Is that my problem? Definitely. It's definitely a me problem. So yeah. Excellent. Daniel Mosley says, thank you. You gave levels on silver a few days ago. I marked my charts and waited. It paid off big across 3 XFA accounts. There we go. That's what the Euro trade is all about. So it's not about, oh, what am I going to do? I literally just provide you with the unbiased view. It's like, where are the open interest guys sitting, right? And then it's down to you as a trader to see whether there is an opportunity there. I don't give you the expectations. Obviously, you have to do your own research. I'm not a CTA. Again, I'm just somebody who's another trader. I think I have a pretty good eye for things. But yeah, these levels, like some of the levels that I tell you, like for example on silver, 65 and 70, they've been there since like last Tuesday. And the only thing that's happening with them is they keep growing in open interest. So it's like, yeah, that's your pinpoints, right? And, all the other intraday stuff that I talk about, like the Tom and Jerry chase for the London versus Asia versus COMEX versus, New York and stuff, or LME for copper. That's, that remains an intraday outlook. So you need to know those as well. If you're just blindly kind of trading, oh yeah, we'll get up to 70 and then hedge. Yeah, it could happen. Definitely could happen. But what if there's news and the news is bringing in more uncertainty? Then the 70 becomes an area of interest where you want to see the break and then a test of it, and then you want to see it hold. So it's still the same level, but the hypothesis around it changes, right? And let's say that we didn't have the implied volatility increase today. What would I expect? Well, I would probably expect some hedging to happen. But because of the volatility increase on this rally, they're expecting more momentum. The momentum guys have not gone home for Christmas. They're still around in the metals. So it's definitely an interesting time of the year. Generally, when it comes to my personal accounts, I wind down my activities around the 15th. But then luckily I still have prop. So we can scratch that itch, right? But yeah, I don't know how much I'm going to be trading the day before Christmas. That's, another thing. But yeah, I'm not going to be doing 5 to 10 trades across different products like I usually try to do. So the frequency of the trading is going to massively decrease as we get into the holiday cheer. We do have our tree. In fact, what I'm going to do, I'm going to try and create sort of a educational video for my own channel. So I'm going to use this time to bring out some more value. So I'm going to be talking about ADR and ASR. I'm going to be talking about our new Discord utility server on Blotech, and just to provide you with details of how I use those particular areas in like 3 strategies. So that's the video that I'm creating. But I've realized that a lot of you really love it when I'm not in the office for my own videos. You like when I show a bit of the dog walks, and when I show a bit of the countryside, and when I'm just doing random things. Now these days I don't really go in the car too much. I used to love doing like little car vlogs, but I just sit at home. Having said that, the home is rather lovely, so maybe I'll just start doing like little snippets of the video pieces and stuff as I'm making my coffee, or so let me know, is that something you gravitate to? Because every time I do a video like that, that's more random but still provides value, and we stick to the same subject, people seem to enjoy that more. They're a bit more difficult for me to make because I have to like change locations and stuff, but yeah, since I haven't done a video for a month or so, and I haven't done a video like that for I think a couple of years, I think it's time that I put a bit more effort. Kavika says, so you can pass combines while having a live account, you just can't activate them. Yes, so when you are in live, you can still do combines, no problem. It's just that those XFAs cannot be activated, and they will be sat there until the time that you either blow out of your live or you decide to drag it down for whatever reason. Like let's say, you have about 5 XFAs waiting in the wings, but you're a live trader. And then if you get, let's say you stay with them for 6-7 months, a year, and then you decide you want to use that capital for something else. You would reach out to the risk team and you would just tell them, hey, thinking about withdrawing this because, I want to put it towards, I don't know, new car. Maybe you're buying an apartment, maybe you're buying a house. Whatever it is, maybe you are saving up for, I don't know, a wedding. It could be anything. And you decide to put that capital to use. Or you can just put them in long-term stocks. You have something that you want to do with that money, right? And they don't want it sitting there. So anytime you take a payout, they will take a little chunk out of it too. So, And then once you're out of the live, you then are able to reactivate your XFAs that have been sitting there. So they don't have an expiration. It's not like the XFAs that you can activate that go away within 30 days, right? It's not like that. They just stay there indefinitely until you're ready to activate them, basically. So doing combines whilst you're in a live account, it's still a great way to train yourself. It's still a great way to remove risk. If you, let's say, don't want to trade the FOMC live, but you still want experience and you still want to try it, that's the point, to open up a combine and see how it goes. Keep gathering data. I'm constantly flipping between combine, live. So combine accounts that matter. But why? Because I noticed that even after the weekend, I'm somebody who's 45. My brain doesn't work as well. Sometimes I don't remember all the stuff that I'm supposed to remember, or I miss things. I'm like, oh, hold on, this shouldn't be in this. And in that moment, I'll be like, you know what? Let's just try this because it's maybe, or like you see a setup that's maybe not the best, is a bit of a punt. Should you be doing that in a live? No. But let's try a punt. And usually, in my case, those don't really work out, but I take them on combines. Very frequently we have a range that happens in metals at this time of day. So am I supposed to be running my XFAs in live into the ground because somebody in chat wants to see me click a button? No, especially when you're in live, you don't have the option to be wrong, because for me, especially if the day doesn't start off well and it's early, there is a mental trigger that can happen to me where I'm like, oh, I need to get back to like scratch before the New York session starts. It's a very bad thing. It doesn't happen often, but I have caught myself since I've been doing these streams with a new problem. Because obviously before I was running my own streams just in and around the post-NY time zone and into the Euro close, which is my prime time for trading. So I would very rarely sit down to look at metals. You know, I would trade DAX, but quite honestly, before I started doing Euro trade and before we knew the DAX is not coming, I've never traded metals. So this has been a huge 2 years of data gathering and learning for me as well, right? And yeah, never stop learning. Like in the markets, there's always something to learn. And I'm actually gravitating towards trading, you know, early Asia, and then trading the London reversal, and then staying out on metals in particular until post-NY cut. But yeah, if you know, if I didn't have to do these streams, I would probably start looking at the markets around 11 a.m. my time. So about 90 minutes after the stream, just as this stream is ending, that is when back in the day I would be looking at the markets. And even with DAX, you know, sometimes I would trade DAX failed auction for a little scalp. But most of the time I would even wait for that to get about 2-3 hours of data before I make my decision. And I'm really the best when I have about 3 hours of TPOs that have gone by so that I start to get an idea of what they're trying to do. And I suppose I'm one of the rare traders who is better end of day the more data I have. I know that many people, I don't know whether it's like maybe people spend all their mental capital too early. And then by the time that the Euro close comes, they're expecting like some breakouts and they can't quite focus. But I take breaks in the day, right? So I will not trade through like 10 hours. Like my own health conditions won't allow me that anyway. But even when I was completely healthy and super fit and strong, I still never did that. You know, I still focused on maybe 90 minutes to 3 hours of active trading, maybe. And that would be it, you know, get all the trades that I want to do in my prime time, which for me was always between my 3 p.m. up to about 6. And then if I didn't see anything for that time period, for post-NY cut, I would then wait for day range fills. For some days, I wouldn't even trade until 6 p.m. my time. And then I would go into the energies, because the energies markets are really good at that time of day for me. And then I would look for the setups then. Sometimes it would be a scalp. Other times it would be a bigger trade. But, you know, so I have times of day and products that are sort of designated for that particular session. But yeah, sitting there for 12 hours and then expecting that your mental capital is going to stay the same, that's not going to be a good thing. So what I do if I have to do, you know, stream, then I have another appearance. I typically have a little nap or a yoga nidra session. I don't have to actually sleep. But I will lie down even just for like 40 minutes and get my eye mask, get myself into, you know, a comfortable bed, and cover myself up. I'm all like nice and warm. And then I would just listen to Ali Boothroyd on YouTube for at least 40 minutes. Sometimes I fall asleep, other times I don't. And then by the time that I'm supposed to do another appearance, I am effectively washing my brain. Because I don't know whether you know, but the cerebral fluid does like a brainwash of the thoughts on the day. So anytime you take a nap, you effectively brainwash yourself from all the bad stuff, and you renew the mental capital and everything. So if you can force yourself as a trader who wants to trade through multiple sessions, if you can force yourself to have a nap, and trust me, before I got sick, I never had naps. I was one of the people, crazy people who works like 17, 18-hour days. It wouldn't be all trading. It would be a lot of the business stuff. Then I would do some coding. Then I would go do website stuff. Then I would do more trading. Like, I was just insane. And if my illness has taught me anything, it's how to manage my energy better. And that is a highly, highly positive thing that's come out of this. Because I just never, you know, you get tired. And I was one of the people who was like, no sleep. Sleep is for the weak. And then I would just push through. So there will be days when I will be so tired at the end of the day, but I'm still like making videos at like 2 a.m. in the morning. I'm like, yeah, this needs to go out now. It's like totally insane. And now I'm like, no, 9 p.m. It's time for my tea. It's time for me to have my bath and then sparkling water and then get into bed. I'm very much careful with my sleep hygiene these days and making sure that I go to bed at the right time. And I'm speaking from a night owl perspective. I'm still a night owl, like as a chronotype. My brain still works the best between about 6 p.m. and 9 p.m. Still. Even later, but, because I do things in the day, I do get a bit more tired. So, I obviously can't just get up at 6 p.m. like I used to when I was a musician. Because there's that side. Being a musician is a nighttime job. So my job wouldn't even start until midnight. And, I would usually wake up around 3 p.m. Because you wouldn't go to bed until 7, 8 a.m. It's literally like graveyard shift. Why? Because the club, you'll be coming off the stage at 5 a.m. And by the time you get home, by the time you take your face off, by the time you take a shower, you eat something, you settle down from the buzz of the club, it's like, before you know it, it's like 7 a.m. So I've lived very different lives. But obviously now I have a lot more of an ordered schedule, which is actually a pretty positive thing. But yeah, mornings is still not my prime time. So I have to work around it, right? But yeah, just mind your mental capital. If you have to sit through 2 sessions, just try and get some kind of a nap in, because it really, really does wipe all of your random thoughts, all the negativity, and it is a physical, biological process. It's not like, oh, Dee's making shit up. No, it's an actual process where your cerebral fluid will effectively wash the brain out, and you wake up a new person. That's also why I joke that I'm a little bit like 50 First Dates, like Drew Barrymore character who has an accident. It's an Adam Sandler movie. And in the first part, it's quite funny. Then it gets a little bit mushy, which is, but, in the first part, he meets this girl who's like, he really likes her. They hit it off. Everything's great. And then he sees her the next day, and she doesn't remember any of it and behaves like he's a total creep. So she had an accident that effectively prevents her from retaining the day's memories from before the accident. So every day is a new day for her. And as traders, we need to be a little bit more like, I think her name was Lucy. Yeah. A little bit more like Lucy from 50 First Dates. Justine, I am, or is it Justin E? I don't know. It's not very clear. So if I butchered that, I'm so sorry. I'm mostly active on YouTube. Again, I'm not somebody who will wallpaper you with videos on YouTube. I don't do that anymore. If I have something of value to add, I will make a new video. It is not in my interest to suddenly go, guys, I'm going to give you like 1 million videos and 500 shorts, and you can't even catch up with that. I'm old school. Honestly, I'm tired of social media, if I'm going to be completely honest. I'm just going through this period where I'm just sick of social media. Ever since we got shorts, reels, TikTok, all of the like tiny short span nonsense that you see, I think people have started, like, we now have doom scrolling. It's like, what the actual hell is happening there? Or as somebody would say, what fresh hell is this, right? Because it is a hell of sorts. When you start, you cannot stop, and it's just constant barrage of nonsense that is getting assaulted. You're getting assaulted with. I do it too, but I don't like it, and I consciously stop myself from doing it. So I don't want my channel to be that. If I have something funny to say, I will use Hopper McTilt or, Pete the Process Parrot, or put on a grasshopper hat or something to be a little bit more whimsical in the shorts mainly. But I'm not going to do a long form video of about 10 minutes that is super dry. So it's always going to have a little bit of humor to it. But the biggest thing is it's always going to give value. So I'm not going to make a video just for the sake of making a video. I'm way over that. I've been on YouTube for way too long to know what it's all about. And I've been there through all the algorithm changes. And by the way, us legacy accounts, YouTube algorithm absolutely hates us. We literally get pushed to the back because we're like, oh, you're a long form person, go away. So we're almost pushed to do shorts, but I absolutely despise shorts because, what do they bring? So the only shorts that I'll be making in the future are not going to be snippets of my actual videos. It's literally going to be a new character called Hopper McTilt. He's a grasshopper. He's sort of like your unreliable mentor. So it's not going to be my face. It's literally going to be a puppet. And, he's going to be giving you a whole bunch of useless advice. Because I find shorts to be quite useless. Like, maybe if they were like 5 minutes long, maybe that would interest me more. But like, what can you say? And every time a short goes over 30 seconds, people already lose the plot. Like, I have a big problem with that. I do. Maybe that's me being old. Like Andre told me last week. It's like, Dee, it's just us being old. Yeah, he's right, because Andre and I are the same age. And yeah, he's probably right. I am being the Granny D at this point. So getting a bit set in my ways, letting my gray hair grow out. It's all happening, guys. Advising people to take naps in the middle of the day, hydrate. But it happens to everybody. Eventually we all just settle down. So, yeah. Yeah, exactly. Anne-Marie, good to see you. Why trade silver over gold? Frankly, I find it more palatable, smoother. Like, for example, especially for this time of day, look at the amount of movement on gold versus silver. So which one has a skew? This is both 30-minute chart. Which one looks sideways and which one looks like it actually bounced from a level and went into a little move upside? Silver, right? Gold looks like a barcode. It looks flat like a pancake. So for this time of day, and any time of day really, I also find that silver, when it moves, it sticks to the move. Whereas gold is starting to exhibit this like speculative behavior, like NQ, where it spikes up and you're thinking, all right, so we're up above the level. And then it goes down below the level. Then it jumps around it. It's like, that price action irks me. And I like it to be smoother. So that's why I gravitate towards silver and copper. Copper is really slow. Like if you are, again, Granny D like me, I love copper because it's like, you can trust that once it's closed the 30-minute time frame outside of something, yeah, it might pull back a little bit, but my analysis is generally strong enough to pick decent levels because of the gamma exposure and value areas and market profile and the way I do things, and also time of day, right? So when I see a reversal from a level on copper, I know that's not going to go horribly wrong in like 3.5 seconds or a nanosecond where I won't be able to react. And if it doesn't work, it will slowly just go below the entry and then slowly kind of go into minus 10 ticks, and then I can just pull it off. No drama, no nothing. It's like, it's just allows me to manage the position with no emotional involvement. And for that reason, I think the only thing that I would be comfortable trading with any sort of size on these sorts of accounts, once I have a bit more of a buffer, would be copper. Like copper, I probably could trade about 5 or 10 of them at some point without freaking out over the balance. But the balance needs to be higher, obviously. However, I still wouldn't do that until there's probably about 75 to 100K's worth of balance. But yeah, so copper, because of its slowness, it's the thing that I would trade with size. Anything else, silver, gold, platinum, RBOB, heating oil, crude oil, again, no, because it's so fast when it does fall. It just jumps off a cliff. It's like Wile E. Coyote when the Roadrunner screws him over. And he just goes, whoop, and then he falls off a cliff. You know, that's crude oil. That's how I look at crude oil. Wile E. Coyote vibes. That is probably not something you want to trade with a lot of size because of that penchant to turn around and go for 100 ticks out of nowhere. But, you know, people trading NQ with 15 contracts and stuff, I don't know, that is like, to me, a bit reckless. And there's no, you know, right or wrong way. But, I mean, let me just put it out there. When I had like a massively sized account, well, not massive, a couple mil, I did trade 80 lots of NQ, and it didn't feel like I'm making a huge dent in the whole account. But the account size to me is the pain point here on prop. To me, unless you have an extraordinary amount of capital, trading with size, the only thing that you're doing that is increasing your risk of ruin. That's the only thing you're doing. And for people who get into a new XFA and plop in a 5 or 10 NQs, I don't even know what to say to that. That's just like, to me that would be a gamble. Why? Because the size is so big that you just don't have enough space before you blow out. Like you can't absorb several losses before the account is gone. So you're really holding on to that first trade to get you ahead of the account. And if you came to a risk manager of any other firm, or of any firm, anywhere, or a hedge fund, go to a hedge fund. So I saw some guy who was saying on Twitter how he went to one of the big hedge funds, and he showed them that he's got like Sharp of like 6, and how he's pulled out $250,000 over like 2 years with prop firms, and they just laughed at him. And he was like, yeah man, keep laughing. And he didn't understand that the size that he was, like, they were laughing at him not because he made money, but they were laughing at him because of the size that he was doing it with. So it's like, risk first, guys. If you are not risk aware, no serious firm is going to touch you with a barge pole, however much money you pull out. And then especially because that wasn't done with one account, it was done by replicating 5. It's like, so cut those $250,000 down by 5, divide that by 2 years, and it's like, it's still a decent amount of cash, right? And he's still profitable. But that's still a hell of a lot of risk. It's like they don't want to, like, you will be managing, if you work for a hedge fund, you will be managing clients' money that is like multi-millions per client. And then on the fund level, billions. Do they want some sim farmer trading for them and thinking that that's how you do things? It's like, where is the risk? It's like, cool, you made money with oversized leverage. Great. But they won't touch you with a barge pole. They won't. They'll be like, ew. You know that meme? Ew, brother, ew. Ew. Give me that moment, yeah? Is there any place to get open interest levels for free? Yes, but with delay. So you can go to bar chart, actually go to Google, and without having to pay for APIs or anything like that, but there is a 15-minute delay, which is not a huge deal in the options. It's not like the options are so dynamic that every 15 minutes something's going to change. So you can type in whatever thing you want to analyze, and then you go, like for me, it would be silver, bar chart, silver, options, and then it will give you the current contract, and then you will get a list of things. But just beware that the real time is 15 minutes delayed, and all the options chain is not real time, obviously, because you would need to pay for that. But still useful if you want to do it for free. If you want to pay a bit of cash for the end of day data, then you always have Mentor Q. They actually categorize each open interest level by a number. That's where GEX 1 to 10 comes from. But for most things, it will be end of day only, which is still very important because let's say for silver, I told you that 65 and 70, they've been there as open interest pain points for a whole week now, maybe even longer. I haven't looked all the way up to 70 because we were lower. But yeah, that hasn't changed for like a whole week. So it's like, yeah, sure, you're going to get smaller areas of open interest coming along the way that, there will be hedging. Like, for example, here we had 69.50. There was a minor resistance. There's some open interest there. And it caused a little bit of a hedge. Do I expect that to hold? There's some major resistance? No. I would expect to see the next reaction around 70. But depending on how we get there and whether it's the time of day, let's say we get to 70 and it is the euro close. I'm not going to be going long into the euro close. Or short, for that matter, because we're so bullish at that point. So I will stay out, wait for the wobble back the other side, and then I'm going to sit and wait watching book tape like a hawk to see when the buyers start stepping in, and then I'm going to go long. Why? Because I want to trade through 70 ultimately, even though it is a resistance, even though there's a ton of open interest. So they may hedge there, but everything is screaming super, super bullish. So I don't want to be, I want to be away from the 70, but long. Now, whether that turns into something that goes massively over 70, we start tracking towards 75, that's for later on in the week. Maybe tomorrow or the next day. Maybe even next year. I don't know. We'll see. But I wouldn't be surprised to see silver at 75 at all. Have you already gone through copper levels? Yes, I did mention copper levels too. So I can quickly go back. I did also say that out of all of the metals that I track, gold has this kind of the cleanest options chain, but to me, silver is more obvious somehow because the price action is cleaner. Gold is kind of going into a new all-time high, so it's like, all right. So copper. Trying to find it now and got lost in the analysis. It's all silver. I already did a lot of work this morning. Sometimes you kind of do work and you're like seeing how many things you've already done, and you're like, whoa. It's like, what the hell? That's gold. So where the bloody hell is copper? Hold on. One thing that I would like AI to start doing, actually putting the times and dates on these things. Because frankly, do you know that AI doesn't have a concept of time? Ask it. Have a bit of fun. Ask it. Okay, so copper 550 was a breakout area. A lot of calls there. Over 3,000 open interests. So that's already broken. So I would expect 550 to be supportive. Having said that, 548 was Asia low. And there could be a pullback and a test of Asia low and ADR low. But we also have 545 as the open interest to the downside in the options. Okay? And Next one up is 560, where we have ADR high. Smaller open interest, but still relevant, 1,165. If we get to the time of day, like let's say similar scenario as in silver, we get to euro close and we're sitting around 560, I actually wouldn't mind putting in a hedge short, so to go with the dealers shorting the nearest resistance. Why? Because copper is slower. The volatility has come up, but just looking at the daily chart, we are still struggling. And if you read Mentor Q, the CTA's analysis, like how they're getting positioned, they are flipping long, but it's not complete yet. And that's why I think we have more opportunities for hedging from resistance than in some of these other metals. Whereas hedging from 70, yeah, it might happen, but it's probably not going to be very sustained. Whereas in copper, because it's all still inside bars, it is not all-time high. We're far, far away from that. And we're still trying to go through that weak structure, which is a massive, massive single print on the weekly chart. But we've struggled, and we've taken like the entirety of the summer and the better part of Q4 to actually even get halfway through it. So it's not super strong, therefore more hedging can be expected. So my pain points in and around these current prices in the Asia high-low range is 545. Obviously Asia low is a pain point. They may not reach the 545 because it's got an upward skew. And then 550 we need to hold if we're going to have a continuation move without the Asia low tests on the way up to 560. And then after that it gets a bit mushy. Okay, so those are kind of the more obvious levels. But at the moment it's all looking like it's still Asia price discovery. So we haven't really gone outside of that yet. And we have to only play the levels within the Asia range. So here's the thing. Asia sets the ranges on a lot of the days because that's the first session when you do get that price discovery. That's why all of us look at it. It's like, what did the overnight do? How did it behave? So Asia high, Asia low, great reference points. Even if you're going to do a breakout trade, like for example, if I'm looking for a breakout from the initial balance, I actually also want to see the breakout of the Asia range. And if I don't, that's not a good trade. I'm probably getting involved in the middle of nowhere. So I always, on metals in particular, because metals trade a lot during Asia, you have Tokyo and then you have Shanghai Exchange, which is a very important exchange in the pricing of certain metals. And you obviously want to make sure that you add some sort of analysis around those. And to me, I actually have an algo that only looks at Asia high-low breakouts and then a reversal. Obviously, if I see that Asia has gone very bullish, like it has done now, I will actually switch off that the algo for the short side, and I will only tell it to run if we smash down into Asia low and reverse back into the range. So I do have the human involvement in algos because I can tell what is happening a little bit better than AI that is purely systematic, right? So there's always some discretion there. So if I see that we've traded outside of the norm during Asia, that's very bullish. So there you go. There's your copper levels. Yeah. Now we talk. Exactly. I love seeing that. Daniel, awesome. Levels mark, now we stalked. Hashtag market stalkers. Brilliant. Primal Rage TV says, I use ChatGPT for morning briefs of the market every day at 8 a.m. and 9:45 p.m. It sends me updates. Yeah. I have something similar happening with my thing. I have the IV tracker and I have the API ping, but I have it at 6 a.m. because I want to see where the Asia high-low is. So yeah. I mean, automation is great. Just don't expect AI to give you thesis. You know, it's not there yet. You can use it for automation and for crunching data. It's very good at that. Obviously very good at language. But the problem with ChatGPT that I have is that the reasoning is not quite there. To give you an example, I was working on tweaking one of my algos, working on a break of the Asia range. So don't know whether I'm going to run that. It was just like a hypothesis, and ran the back test, and I'm like, yeah, maybe. And, I wanted to see if I can create something that I could run as a test, like an out-of-sample test. And then I'm trying to work on the logic, right? So I said, okay, so once you've broken out, you have the old reference point, which is Asia high. And then I ran it on like a demo, and it entered a long when it was supposed to enter a short. And I'm like, explain this to me. And it went, yeah, well, I mean, you've hit the other target, so now we go long. And I'm like, what other target? Like, what are you, like, AI, have you been smoking something today? And then it mistook what I was actually trying to explain. So then I had to just go in and delete a whole bunch of nonsense logic that it put in. It made no sense. So you can't allow it to do stuff. And then in another example, ChatGPT wasn't understanding that once we break out of the Asia high, but we're looking for a reversal, you're reversing through the entirety of the Asia range, not hitting the former, let's say, Asia high. So it was doing like these, it kept putting targets. They were like 0.1 R away from the, and I'm like, what are you doing? And then and it's like, well, I'm placing the target at the former Asia high. And I'm like, why? It's like, well, because it went above Asia high and then it returned. I'm like, yeah, returned into the range, posts like what? And then I switched to Claude Opus. No such problems. It completely understands what the writer is trying to say. So yeah, I don't know what's going on with ChatGPT. They're slipping massively, and everything else, I think, I want to try N8N, the Google thingy, the new one. But Opus Claude has been very, very kind to me. Does what it tells you, what you tell it to, correctly. We also use it for like unit tests and stuff, which is super dull. So having that automated is never a bad thing. Yeah, you definitely have to teach it, but again, Opus, you don't have to teach anything. It just gets it. So if I explicitly have to tell it that I'm expecting the move, like, of course I'm expecting the move. It's like, hello, breakout and a return to range is the logic. And it goes, yes, we've returned to the high. Therefore, that's where I'm putting. No, we've returned to the range. So the rotation should ensue. And if you didn't say that to it, it just starts hallucinating and making stuff up. So yeah, you have to be so careful with AI so that it doesn't go off on one. And I know that half of the data, so here's the thing, every time you're asking for data from ChatGPT or any AI, just make sure that it actually tells you real data, not hallucinations. Because something that I ran into, I created a whole library that I can use as like a modular architecture for various bots, so that I don't have to like keep remaking the same thing. So I have like little libraries for different bits and pieces. And unless I told the old version to specifically, explicitly use this infrastructure for this particular need, it would start making up API endpoints. It would make up methods. I'm like, again, like talking to somebody. I don't even know what to, like, it's got a lot of knowledge, but then it's ultra dumb. It's like, really? So I'm really worried about some companies that are like, yes, we're going to go full AI. It's like, please don't, because that'd be bad. But yeah, it's an interesting development. I'm excited for further AI move, but it leaves a lot to be desired still. I love the automation though. I love the fact that I don't have to manually do things anymore. All right, so I'm going to end it here. So because we're coming into the Christmas week, obviously we've got a couple of days left. Whenever I'm up on the day, I'm probably just going to call it a day and maybe not trade that much. But having said that, I do have group coaching today. So you will see me a little bit later on for some questions and for the mob to lynch us. So you're welcome. Bring your whips. Bring the machete. So we're fully expecting that this week. But let's see what this week brings and how we're going to solve this. In the meantime, be careful. Just like any other day, you know what I'm going to say. Size down. Don't use all of your size to full port, especially this time. Be extra vigilant with your sizing. With put your stop losses in, but if something malfunctions, then that's not going to save you if you're in with too much size, right? So let's just size down whilst all of this is being sorted out. If you still want to trade, I mean, it works. It works now, so it's not really a given, obviously. But let's see what MP says, and let's see how we can move forward and what the solution is going to be, right? In the meantime, I will bid you farewell until group coaching. This was the Eurotrade on TopstepTV. Thank you for joining me and spending time here. I will see you later. Have a great day.